With the coverage of Sam Bankman-Fried, here you have a situation where this is, by the way, Sam, his company FTX was launched the same day as Biden launched his presidential campaign. I don't know if you know that, but it was a bit of a coincidence there.
So I didn't know that, and so that would have been late 2019 at some point. So it's now 2022. So in 3 years, he made billions of dollars. How do you do that?
Hey guys, welcome back to Library of Wealth. Today we have Bitcoin maximalist Max Keiser giving us an update on Bitcoin, the stock market, and how the printing of money is affecting every market around the globe. With cryptocurrency going through a difficult time, Bitcoin has also lost 30% of its value just this year. Investors and crypto analysts say that whenever there's a sell-off, to be aware of any projections that indicate a lower price point of the prevailing downtrend. Keiser has been warning people that fiat currencies would collapse and why Bitcoin is a significantly better store of value. The pricing on Wall Street continues to erode trust with investors, and we're starting to see the negative effects of that now. Let's get into the interview with Max Keiser as he gives his prediction on the market collapse and how this will affect Bitcoin in the next few months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
After Bitcoin was created, a lot of people decided that they could come up with digital currencies that could be used as scams. Essentially, it was very easy to create play money. And I did this myself, as I mentioned, in the 1990s when I did the Hollywood Stock Exchange. I created a virtual currency as part of that game. So I know this market very, very well. And so I can tell you intimately, in detail, from a technological point of view, the ins and outs of these frauds that are being perpetrated. And these tokens that are being created in the trillions, they have, their purpose is solely to be picked up by this cartel, if you will, of VCs out in California. Sequoia, you mentioned, is part of it, and others who are involved in collusion and racketeering. This is the thing about it, Tucker, is that they're involved in a clear-cut case of criminal enterprise. It's a criminal enterprise. It's a racket. They need to be going after with RICO. The Andreessen Horowitz, Sam Bankman-Fried, Sequoia, BlackRock, they're involved in a criminal enterprise and a racket by boosting the price of worthless tokens on each other's exchanges and then using that token as collateral to fund things like, oh, Joe Biden's re-election campaign. Oh, the midterms, which we now know was highly influenced by money that was manufactured out of thin air. They can't get the money from Congress. They can't get the money from their donors. So they created this entity called FTX, which is a huge slush fund. Essentially, it's a slush fund disguised as a crypto exchange, which is managed by somebody. The way I see Sam Bankman-Fried, he's kind of a cross between Bernie Madoff and Charles Manson. And he's perpetrating the biggest Ponzi scheme in history. So imagine that, the mix of Charles Manson and Bernie Madoff, and you end up with this freaky, fuzzy-haired, larcenistic criminal who's down there perpetrating the biggest fraud in history, and the Democrats are like, yeah, I'll take your money because we're morally in need. It doesn't matter when the money is stolen. Our moral agenda means that we can take stolen money because that's the way we are.
Keiser goes on to say that anytime a collapse happens, investors' timelines get distorted. During periods of extreme volatility, the price of cryptocurrency can skyrocket and crash within just a few months. Keiser believes we are on the verge of a total financial collapse.
So, but they've run out of money. So they had to resort to this, essentially this racket. And the racket, you can go back and you can trace the origins of it to the past few decades where we've had very similar instances of financial fraud and abuse. The 2008 crisis I mentioned, the S&L crisis, long-term capital management, if you remember that, the late 90s, they were engaged in a massive scheme, really, Ponzi scheme that blew up. And they were bailed out by the Fed. The hope is always that the Fed will bail you out. The hope is always that the financiers will bail you out, that there will be no accountability. And the question is, well, why wouldn't they have that assumption? Because when in the last 40 years have these financiers not gotten bailed out? When has any of them gone to jail? Okay, Bernie Madoff, he went to jail. But we're talking about literally thousands of people who, if they were properly prosecuted, would be in jail, as William K. Black did in the early 1980s against the S&L crisis. It might be before your time, but remember the Keating Five, Charles Keating.
Yes, of course.
All those people were engaged in the essentially mismarketing certificates of deposits at savings banks and then using that as collateral to go buy yachts and property. And it was a very similar scam, but a rudimentary version of it. So all we've seen in the last 40 years is they're getting worse and worse. The remedy for the 2008 crisis was not to try to put the bad guys in jail. What Bernanke did was they gave him a credit card 10 times bigger and said, just do the exact same thing. Obama, same thing. They said, we're not going to put you in jail. Obama said, don't focus on the past. Don't focus on the past. We're going to look to the future. So we're going to give the guys who committed these crimes 10 times to 20 times the credit, and they're going to do exactly the same thing. Now, at that time, we said within 10 to 12 years, the exact same thing is going to happen, but 10 times worse. And that's where we're at today. We were off by 2 years. 14 years later, it's the global financial crisis part 2. And it's because of the exact same things happening all over again. Remember collateralized mortgage-backed securities?
Very well,
okay.
Yes.
There's a new product just this past week. It's called private equity-backed securities. So they're taking worthless private equity, they're wrapping it in a new
I'm adding that to the list of things I'm not investing in.
No, but they've already sold, $500 million to $1 billion of it. Because...
What is it?
It's a private equity-backed note where they're taking the stubs from busted private equity deals that are completely illiquid. And that's what I said. If you read the Wall Street Journal, it's like you're reading a how-to book on how to commit fraud. Here it is. Illiquid private equity stakes bundled into a security known as a collateralized fund obligation with a high credit rating, of course, because they put a little, you put in a treasury bill to make your garbage seem higher. It's called a CFO, collateralized debt obligations. And so they've already sold billions of these.
Who would buy something like that?
Pension accounts. Because pension accounts are, in our country, the people who run them are picked by Wall Street, and they pick stupid people on purpose. I'm now, when I was on Wall Street, this is truth. If I had a trade, let's say I had a trade that I made, and I had like a $500,000 or $1 million error on that trade. You stick it in the error account for the firm. There's no account number. So you don't really recognize it as existing. But on the books of the firm, there's a big error. Then a week later, you're talking to the teacher's pension account or the fireman's pension account. It's a huge pool of money. It's run by an idiot. And you say, okay, it's time to top up the pension account. We're dumping a bundle of securities into the pension account. Into that bundle goes that bad trade. It's a loss, but they just bundle it in and they make it disappear. And the pension accounts are always underperforming the market because Wall Street uses pension accounts as a toxic waste dump. They have for decades.
But those are people's retirement accounts.
But they, unfortunately, have no one representing them on Wall Street, except for some idiot that's handpicked by Wall Street.
Wall Street and Silicon Valley are now doing what the early Bitcoin investors were doing in 2017. With 380% collapses so far in Bitcoin, the next few months will determine how it will bounce back. In the meantime, some experts predict an $8,000 bottom price for Bitcoin soon, seeing a recent 70% downturn since its $30,000 price point in June. If their forecast comes true, it would inflict further pain on Bitcoin and the broader cryptocurrency market, which has seen around $500 billion wiped off its value in the past month. Most agree that Bitcoin will survive this cycle, but this is eerily similar to the dot-com bubble of the early 2000s. While most major cryptos are spending much of the day in the red, ongoing investor fears about inflation and a possible recession grows as central banks tighten monetary policy. What do you think about Max Keiser's prediction for Bitcoin? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.